Trade is re-entering the forefront of investor minds as talks with China are scheduled to resume later this week. And joining us to take a closer look at today's market action and what's to come is the CIO of Efficient Advisors, Larry Shever. So Larry, it seems like I talk about the trade war a lot, and this is going to be one of those weeks again. I mean, already the news this morning was the Chinese are only going to talk about a range of topics. Some things are off. And then this afternoon, it was more optimistic. They want to make a deal. And traders are trying to get their head around that. Is that what the whole week's going to be like?
Well, I don't think it's going to be exactly that way. I think it would be great if it was. And I think, as we get closer to the election, I think the leverage is going to be in China's corner, and they know that. So I think there's going to be a lot of headline to calm everything down. But at the end of the day, I don't think anything will get done, anything meaningful will get done, especially, as I said, are getting closer to our election. But also, it seems like this whole thing is impacting the United States a little bit more than most people have originally thought it would, especially when you looked at the ISM numbers from last week, both manufacturing and non-manufacturing.
So, Larry, given that, is this a theme that you can use to invest by, either in terms of looking for opportunities or things to avoid going forward?
Yeah, well, I think really being more optimistic about it all. I mean, none of us know how this is going to wind up, and backed by the fact that we're in a policy experiment that we've never attempted before. But all that to say, I think take advantage of the chasms that are in the market. Right now, I see value growth, something that was talked a lot in September, as we saw value spurt a little bit, but it's still at a very wide discount to growth. And I think, if you really believe that we'll see a cyclical recovery and not have a recession, it would be a time to overweight or at least get to neutral, especially the two biggest laggards, which would be energy and the financial sector.
So you like value here? Are those your top picks in the space?
If I believe, which I do, that we're not going to have a recession's not imminent, and I do believe that the value is trading at such a discount because of the unknowns going on in the market, and because people keep talking about end of cycle, et cetera. I believe that's going to be lower for longer, and I think value stocks that just going to carry a good dividend yield are going to do very well going forward, and we'll have a spike, especially if we don't have this end of cycle recession that everybody's talking about.
Okay, so Larry, this comes at the expense of growth stocks, maybe in particular growth at any price stocks, which to me means FANG. You can look at them as expensive. On the other hand, they're always expensive, and you're always missing the boat if you don't jump in at some point, right?
Yeah, but I would say, the gap between value and growth doesn't have to completely narrow at the expense of growth. You're right, they're expensive, they're always expensive. I just think there's more of a catch-up warranted for the value stocks. I mean, I will say that bond proxy stocks, which would be a lot of the growth stocks, would be ones that would suffer a little bit, but I think more of the upside is in value as opposed to more of the downside in growth.
Larry Shever joining us, CIO of Efficient Advisors. Thanks so much.
Thank you.
Coming up, we've got the closing bell on Wall Street.